Number 6, the PACE limitations. The PACE limitations was a reduction on the total amount of itemized deductions for high income taxpayers. It reduced the amount of the deductions by 3% of the amount by which the taxpayer's income exceeded the threshold set by the Internal Revenue Code. And it was basically capped at 80% of the total value of deductions. And effectively what that means, if I had, we'll say, $100,000 in deductions, I would effectively lose 20% of that based on the limitations here. So this is what it will revert back to after the Tax Cut and Jobs Act expires. And when you look at the numbers here, the limitation will return the taxpayers above a set income threshold, which in 2017 was $261 for singles, $313 for married couples, will have their deductions phased out. So this is just another way of taking your income and moving it into a higher bracket for higher income earners. Now, when you look at these incomes, some of us say, yeah, I'd love to have income like that, but there's a lot of people in that income area that are going to get affected by this. And then number 7 is it's gonna affect business owners for sure, because it's going to directly affect them. That's the qualified business income deduction. And it's also going to have a trickle-down effect to the rest of the economy and other taxpayers. And this is kind of how it works. The Tax Cut and Jobs Act introduced a new deduction specifically for pass-through businesses. Now that's companies like LLCs, partnerships, S corporations, and sole proprietors. And I'm here to tell you there's a lot of individuals who will fall into this category. In 2024, a single filer under 191, call it 192,000, and joint under 300, we'll call it 84,000, can deduct 20% of their qualified business income. That's a big deal. When the business owner's income exceeds the threshold, the deduction is limited, subject to formulas based on what type business they have. So what does this all mean? It means that when the tax cuts came into effect, when Trump put them into effect, he did it to really spur the economy. And basically what the small business owners did, they started hiring people because they had more profit on the bottom line. They did remodels of their companies. They did retooling. It was something that really did spur the economy. Now, the concern for everybody is if they rescind this, which the sunset will do, they're going to basically be increasing the tax liability for businesses currently taking advantage of it. Now, how does that affect the economy? Well, quite frankly, if a business loses 20% of their bottom line and they need to pay the tax on it, they're going to have less to reinvest in the business. What does that mean? Could mean layoffs, could mean that they don't retool. It isn't typically a net positive for the economy as a whole. So we'll see how this kind of plays out, but it is on the chopping block for the repeal in, less than a year and a half now, Rocky.
Yep, end of next year.
Yeah, end of next year.